Welcome back to the channel. We're going to be going over the SP 500, the Nasdaq 100. Look at the trend line we're forming, and we are clearly breaking out right now. Now, yesterday I told you, major bear trap going on. Everyone was saying this was a bull trap. We were pushing down. I'm going to tell you exactly what I saw and exactly what I see happening going into Monday. So let's get right to it. Now, before we get into that, I have to ask you to consider doing two things: liking and subscribing. Every single day, I'm giving you the videos about how the market's moving and everything you need to be anticipating so you can make money in this market as well. Now, when we go back here, what I want to start looking at are key levels that we're forming at and kind of how we are breaking out now. Now, I want to go to a smaller time frame and show you what happened here in particular. Now, when we come back here, things where it gets interesting is yesterday. We talked about how we moved back down. We tested the trend line. And again, the whole thesis here was about volume and how we were moving. And when I say volume, it doesn't necessarily mean just because volume is low that we had to bounce back up. No, that's not what I was saying. The thesis here was if bears are stepping in, typically on our previous runs, which we'll cover here in a second, we've seen volumes start to stack up on these drops, right? So you're seeing more sellers start into the market and more panic selling happening. However, here what we saw was drop down to key levels, then we popped back up into the next day. And also coming in here, we were well below, around 15 million below the 30-day average on the S&P trading on the volume aspect of that. Now, going into that as well, when we go and look at S&P futures, where were they at? Where did they come down to? You did not get back below the $4,200 level once yesterday or today. And then you started bouncing. Again, I want to highlight key things that we continue to go over because this is going to prepare you to start trading as well. And I like to just give you all the tools that I'm looking at. There's no secret sauce, no secret mumbo jumbo. It's watching price action, watching volume, and then staying according to some of the fundamentals as well to find some of these plays going on. Now, also going in here, this is just a recap before we even get into what my projections are. Going into VIX, you are still in the downward channel. What did I say yesterday, people? Everyone was saying VIX is pumping, it's pumping. You barely even, you didn't even make it to the median line and you rejected back down. In my opinion, we don't need to worry about VIX popping back up or getting quote unquote bullish on the VIX, which will indicate S&P and Qs dropping until we get down to 18 at least. And we are looking for a $16 retest to those lows. And again, you can go back to the COVID level, basically the past 2 or 3 years. Look at this key level back here. This is where you expect to get that bounce on it, if you will. So that's what I'm looking at, and that's how I'm looking at the VIX in particular, but it still has downside in my opinion. So whoever you're listening to, you're watching these crazy charts on Twitter, social media, stop. Stop. Because I'm going to tell you all that matters right now is what the Fed is telling us and where the volume is. So what we're going to do is go back very quickly to the Nasdaq. I'm going to go over futures in particular for this whole video, no mentions of stocks. And now, primarily with this futures trading, I want to highlight what's been going on. So again, we're on the 4-hour chart going over this whole trend that we basically made since the lows that we had back at the end or beginning of June, if you will. Look at how you will continue to retrace and then continue on. And it looks like you are trying to break out. These levels go all the way back to April, basically the end of April and then the beginning of May. That's where these levels come back to on the Nasdaq. And you are breaking above these levels right now. Where does that leave us? Again, when we start getting above this, we got to start looking at new targets and key levels. Next key level, in my opinion, next target has got to be 13.7. That is your range that you're looking at right now. 13.7, next level to the upside that I'm looking at right now, but it's only about 120 points roughly away. After that, the key level I'll be looking for is going to be right here, roughly 14.2 to 14.3. 1400 will be a key test as well, just because of the significance of that overall number. But that's where I'm looking at right now. So key level 13.7 up into 14.2. Now going over to ES futures, the S&P. The ES has been moving slower. I've been highlighting this as well. ES was moving slower than Nasdaq. And again, when we come here and look at ES, what's happening, right? What are we looking at? Now, I know there's a lot here. I want to actually clear some of this off just so you can see this a little bit more clearly because I've been trying to show you guys what I am doing. The key areas here are previous highs, people, on the trend, okay? So as we push up, we make a high. That's our zone. Previous high, you come down, you retest, and then you mount back above, and then you continue. Then you push back up. Guess what? Previous high. Well, surprise, surprise. You push back up. You don't get the retest there. You come back up. You make your high there. Previous high. You come back, retest, remount, and you continue pushing up. This has been the going trend. Now, if you're wanting to look at the market in a bearish sense, and I understand wanting to look at it, in a long-term perspective, I do think there is potential downside, okay? I believe it's going to come back into Russia, and I believe it's going to come back into Europe. That's the foundation of downside, in my opinion, based on the economic crisis they are in right now. That is the foundation of everything for more potential downside. Now, if you want to look when sellers, and it's becoming a quote-unquote bear market, or you're coming to a bearish trend again, look how sellers step in here continuously, and it's violent. Again, something we see on the channel. Bulls take the stairs, bears take the elevator. It's very clear on a 4-hour or daily time frame when the bears are stepping in continuously, right? So when we come back down and we look right now, there's been no real days like that. There hasn't, okay? So when you're panicking like y'all were the past few days, look at the price action. You were just retesting highs that you had previously made and that key level you made back here on May 30th. Now you're getting back up to those highs that we mentioned around the 4,300 mark on ES. We've been talking about that one as well, and you're finally getting to that level. You're also coming to the trend line as well on ES. So when you zoom out, you can also see you're coming to that trend line as well, trying to break out here. Nasdaq has done it. Can ES do it? I believe it can. That's what I'll be looking forward to. Now, it's important to also know, I don't want to jump all over the place here, but going into next week, this is investing.com. You can look at them. This is what I use for my investing calendar, basically going over when it's GDP, PPI, CPI, any key dates, Fed meetings, things like that. You don't have news, in my opinion. Before I go any further, I want to give a special shout out to Hanka Trade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing a $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And a key reason that I'm using Hanka Trade specifically is because, one, they're going to use my base currency. Two, if I ever want to do something like Forex as well, when it pairs well with something the way that the economy is moving, I can also use them for that. But it's also going to be very minimal when it comes down to these commissions, which can rack up. They're also going to give you the capability to go to max leverage. Now, I'm never going up to 500, but I am leveraging my money specifically on futures. And when it comes to trading any type of Forex or anything like that, based on what I'm trading and how my style performs. And just so you know, they are also running a bonus, giving you 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there are certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about here in the video. And you don't have any news basically until this time period, around the 25th. So when the 25th comes, that's when you're going to start having GDP. Sorry, it's actually going to be the 24th. I got that mistaken. August 24th, I believe this is your GDP date. Am I wrong? Nope. Sorry, 25th, I was right. So the 25th is your GDP date. There's no real massive market making data coming out until then. And then after this week on GDP, guess what happens? You have your Fed meeting. So that's going to be your kind of choppy area to where you might see some potential slowdown or downside. Until then, again, I remain with the thesis that this was a bear trap and you are pushing back up right now. Now, we've looked at a lot of stocks, we looked at a lot of things like that. So when we're looking at Nasdaq, I continue to see the strength playing out right now, okay? So I don't see any downside or any real bad news coming unless, one, China does something to Taiwan, or two, we have some crazy breaking news with the Fed, which I don't think they're going to do, but it's already been established. GDP has been revised once again to a 2.5% growth. So we need to start seeing what comes out from these new GDP prints. That's what's going to tell us. So I don't think you're going to see any market slowdown until then, okay? And that's around the 24th. So I think next week has a lot of room. That's my personal opinion here. So going into this, what do I see happening? I want to see a test about Monday, maybe Tuesday of 13.7. If you get above there, I think you're going to be very bullish up into the 14 range and then 14.2, 14.3. That's where I would be targeting. Yes, we're going in here, and this is one of the harder ones to look at because you haven't broken out yet. But if you're looking here, in my opinion, I'm looking more at the 43.5, 43.6, and then you have to be looking for a test around the 44.80 range up here. So this is going to be the big range that you want to see locally about this range. And then you also have a support and resistance right here as well around this level. Let me bring it down. You're going to be looking right here, or roughly you can actually tighten that up as well. So I'm 43.50, and then after that around the 44.70 range. I'll adjust these if I have to in the near future, but that's the range that I'm looking at right now. You're just moving in a very bullish sense, okay? And I got to keep that very transparent for you. Now, when we look at flow, I also want to show you here what's happening on the market. Looking at Qs, we've been discussing this very in depth the past few days. Look at what happened to Nasdaq and the Qs. Tons of call options flowing in here, and it's all towards the bullish side. Very minimal puts coming in here. SPY, it's a little bit more to the put side. I will say that you're having some big blocks, but in my opinion, again, you're seeing hedges come out because now people are establishing longer term positions and they're buying into some of these other stocks that they're liking. But when we're looking at this, we've seen the script obviously was flipped. We've seen a lot of SPY calls coming in and Q puts, but now you're seeing some SPY calls or SPY puts come in, and these are blocks. These are not aggressive ones as well. So when we're coming back here, I want to look at VIX as well. People are buying calls down in this range, and in my opinion, this is all big money trying to find any sort of hedge on their positions just in case. And you can see by the date of these positions, you have January 18th of 2023. This is September. That's a very close one. But you have February 15th, 2023, and then November. And in my opinion, again, if you're going to see any downside, it's going to be around the October and November range for when we really start to push down, or we see any type of economic trouble. So that'd be after the September month, in my opinion, and then it'll be coming into October and November, because that's when winter starts to kick out in Ukraine and in overall Europe. And that's going to be the concern there with their economic crisis to what they're using to fuel that. Because if you know anything about that right now, you have natural gas and commodities are not looking good. Specifically natural gas. It's been going just crazy lately. And that's because of what Russia is doing with shutting down those pipelines. And that's the longer term case here for potential downside. But until then, we have to remain bullish. Today as well, I was also looking at Bookmap. This is Bookmap, and this is the ES and SPY futures. Now, you don't have any icebergs coming in, but we did yesterday. Yesterday, it was nothing but icebergs to the upside. But today, we saw something interesting with volume. The green line here, our CVD, cumulative volume delta. All it does is simplify buyers on the market versus sellers on the market, okay? That's all it does. Yesterday, our CVD was butchered. Today, it was nothing but green to the upside, showing for continuation. What was I doing in Discord? I was buying calls all day. I was adding to positions, longer data positions, getting ready for this as well. That's what we love to see. If you saw our video yesterday, we told you what we were trading, and go look at how those played out. Those almost all went up almost 100%. Our longer term positions are a little bit slower, but these shorter term ones absolutely went crazy because what we expected based on what the market is giving us. So you can't be rushing into these plays. But when you start to get what the market is showing us here and you start getting these opportunities on dips, that's when you have to strike, is when the market starts dipping. And that's what we did yesterday. We started setting ourselves up for this massive push that we did get. Because again, looking here, a lot of people were trying to say that this was a shooting star candle and we were going to push down, and Nasdaq was bearish and ES was bearish, but they weren't looking at the facts and they weren't looking at the fundamentals being pushed to us right now. We have midterms coming out for the Democrats, which they need the market to do well right now. They need gas prices to drop. That's why Nancy Pelosi continues to spout that off, and that's what's going on right now. And this is not a political channel, but it is here to show you how politics coincide with the stock market. So you're never going to hear me BS you, lie to you, tell you anything like that. I'm going to tell you exactly what is happening with our market and how you need to be looking at this going into next week, tomorrow, or wherever we are trying to trade right now. So that's what we're looking at, and that's how we see this moving, and that's what I'm doing right now. I'm preparing for more upside, and I do believe more is coming.